just wanna dance. Get the feeling you don't wanna wait. I know that you want me here and now. Fire, style, good man. Yeah, I'm feeling I just wanna dance. Get the feeling you don't wanna wait. I know that you want me here and now. Oh, you wanna party? Listen to your body. I want to get naughty. Girl, I really like the way you. Ooh, ooh, ooh. Girl, I really like the way. Girl, I really like the way you. Girl, I really like the way you. Body, plan, daddy, working. Put it on me, my hands on your waist. You can come over my place. I know that you want me here and now. Oh, you wanna party? Listen to your body. I want to get naughty. Girl, I really like the way you. Girl, I really like the way you.
Yo, yo, yo. What's going on? What's going on? How we doing? How we doing? Good morning, good morning. Let me know if you guys can hear me good in the chat. I'm gonna get started in like 2 minutes here. What's going on? What's going on? Hope everyone's doing well. Thursday morning here. We're gonna get started soon. It's New York session. Markets are open. Hope everyone's doing well this morning. Let me know if you guys can hear me good in the chat real quick. Thursday morning here, bright and early. New York session's opening. And soon there's going to be some movement in the market. We might be able to find a trade on this session if we stay patient. Yesterday was about patience. If anybody was on yesterday, had to stay on for 2 hours. Actually 2 hours till I found a trade. It took patience, you know. A lot of times people want 5-minute answers. In a market, that does take patience. So yesterday was a lot of patience involved. We may take a trade on this session. We're going to be streaming for a bit, going over some good stuff. Yesterday I took a trade live on this stream. But we were on for a good amount of time yesterday. You know, we showed up, we were on the charts. I even took a loss live. And then we had to wait. It was 2 hours. I waited, sat there, kind of boring, right? Sitting there for 2 hours, doing nothing, prices moving. and you want to find a trade, markets are moving. It's the boring job of trading. The boring part of trading, right? It can be boring at times. You have to wait. You have to stay patient. And yesterday, if you were on the session yesterday, I showed that experience because we were on for 3 hours, right? We were on for a total of 3 hours yesterday. Because I knew I had to be a bit patient. I was like, all right, I'm not just gonna get off. I'm gonna stay patient and see if there's anything to execute. So that patience can bring you to, your strategy, your setup. It's not always about predicting what's going on right now. Sometimes you need that extra patience. So patience for what, too? We're going to talk about patience for what today? What are we being patient for? Because a lot of traders, you hear that you need to be patient, right? But you don't know what you're waiting for a lot of times. So we're going to get into some good stuff today. And we're going to stay patient like yesterday. See what the markets do. We're going to analyze gold on this session as well. It's been an interesting week. There's a lot of tension in the world right now. And if you're on class number 1, so this is number 4. Yesterday we did some live trading. So I didn't go over what I was actually going to go over yesterday fully. Because I was actually taking trades, live trading. It was different. I had actually something different planned yesterday, but because I took some trades and had to stay patient, it went different from what I actually was gonna go over yesterday. I was just gonna teach you guys yesterday, but I really did, even though that's not what I had planned. Yesterday I was just gonna talk about a lesson with you guys, educate you guys, but the whole session was actually me waiting for that trade, taking that trade, and then I came back on later. So it was interesting. There was a huge lesson there yesterday on the stream. We're going to get into if you missed day number 1, go check out day number 1, day number 2. If you missed the previous sessions I've done, we've been streaming every single day here, guys. All right. If you guys haven't been tapped in the last couple days, try to watch session number 1. Right, the first one we did 2 days ago. Make sure you watch session number 1 at least. Yesterday was a long session. It was 3 hours. There was some live trading in there. A lot of psychology talk. But make sure you check out session number 1 if you missed it, because we're going to be live here every day going over information in this series until May 27th. All right, May 26th, as you can see, these sessions are going to be scheduled all the way until May 25th. All right, got something exciting coming, so make sure you guys tap in. There's going to be a lot to learn here. And now we can see we're heading into New York session. So this is the time where New York session is opening and volume starts to come into the market around these hours, okay? This is where USA market's opening now. And this is one of the most high active trading sessions. As you can see here, we got New York session opens at 8 a.m. to 5 p.m. Eastern time. We're also still in London session, technically, right? We're still in London session, so this is when they overlap. This is when London session and New York session are overlapping each other. So what you can expect now, around these hours, is gold to start moving, volume to start coming in. You can expect heading into these times, these hours, 8, 8:30, 9, 9:30. These early New York hours for volatility, volume, momentum to start coming in. Okay, you can even see the current candle that we're on right now is starting to do a little bit of a spike up on gold. And gold, if you look at the last couple of hours, it's kind of just been consolidating. And another thing to keep in mind when you're coming into these hours, okay, is news events, right? So we have New York session opening right now. You want to keep in mind that you always have news events in these hours. So as you can see, in 7 minutes, we have news coming out for the US dollar. So whether you're in a trade, planning to take a trade, you want to be considerate of this, okay? Especially if you're trying to take a trade right now even, right? A lot of traders don't pay attention to the news, and they'll just get in a trade, and maybe a news event will happen, and they might not know what happened. And there's different types of news events too. There's these news events, and there's also headlines, right? There's also like headlines that come out, okay? Let me refresh this. We also have headlines that come out. So we have our news that directly impacts the market, but we even have headlines, okay? And these headlines can come out day by day, week by week, different headlines that give us even insights of where the world is geopolitically. And especially with gold, we talked about this on class number 1. If anybody missed class number 1, gold, we talked about a lot of characteristics on class number 1 about gold, okay? And right now, gold's something that is being traded a lot. Right now, gold's very popular right now because there's a lot of geopolitical tension going on in the world. So at times it can be predictable. At times it can be very predictable, especially with all this geopolitical tension going on. USA, President Trump, Iran, in the Middle East. Its movements can be predictable, especially when you have patience and you pay attention, all right? Let me know where everybody's tuning in here on this session in the chat. Where's everybody tuning in from? Let me know in the chat where you guys are tuning in from here today. Doing good. So we're going to be streaming every day, New York session. Yesterday we caught a trade. Yesterday there was a nice buy setup we caught. Like literally I was live. I took that buy live. Gold does look like it kind of wants to go up to me. I'm going to analyze it soon with you guys, break it down. Now, when it comes down to executing, if you're on, yesterday's stream was really long. It was 3 hours, right? And I took a trade live on that stream. And one of the things I wanted to go over was talking about candlesticks, right? How we like to trade, things we like to focus on. So when it comes to trading, you have your basics, right? You have your basics of trading. Most people learn the basics, but they don't master the basics. And the basics are support and resistance, candlesticks, price action, market structure. Even just those 4 simple things, right? Basics. Everybody learns the basics, but not everybody masters the basics. Or let's say takes the time to master the basics. Like really put in consistent work in mastering things. Because the basics are pretty easy to understand from hindsight point of view. But then you have to apply the basics. You have to experience. You have to master them. There's mastery when it comes down to the skill set of trading. Now me, I have 11 years of experience. So I'm able to show you guys all these examples over and over again because I've traded a lot. I've mastered the basics time and time again. I remember my first couple of years trading, there was times that I had to take a step back. I would get a bit ahead of myself. You know, I'd be trying to rush the process, learn the most, learn everything, learn, just become a wizard. There was many times in my first 3 years, I would take a step back and go back to the basics, refine things. You know, you can get results, and then you can ruin those results quicker than you got them. And it's like, okay, what brought me to here? What brought me to these results? What was the mastery that brought me here? You know, and what ruined it? What ruins it? So one of the things we've been talking about is candlesticks, okay? Simple stuff. You're going to see me talk about this a lot on the streams. And yesterday I was showing a good example of this. We're going to talk about it today as well. We're going to look at gold later on. We're probably going to stream a couple times, maybe even today, like yesterday. Yesterday I streamed twice. Where's everybody tuning in from the chat? Yo, just want to check out. We here. So yesterday, when we look at gold, I took a trade live right here. So one of the trades I took live was right here. Now, I had to wait 2 hours. I didn't, I was streaming, waiting, watching, and market came down. So this is the 1 hour time frame we're on right now on gold. Right now we're on the 1 hour chart. Okay, so every candlestick is 1 hour. 1 hour coming down. So gold is actually coming down for a good amount of time yesterday. Now, timing wise, it was also a good time to be taking this trade. When we're looking at sessions, this also lines up with timing, which is some of the things we're going to be talking about on these streams moving forward. Timing here. You can see London session, New York session mapped out. So, what do you notice about London session yesterday? Type in the chat. What do you guys notice about London session yesterday? What do you guys notice? Let me know. Let me know what you noticed in the chat. London session yesterday. London session today, not so much going on, but now the market's starting to move a bit. There's news in 1 minute. We're going to see gold move. So London session yesterday, bearish, clearly bearish. You can see sort of that little sweet spot in the middle. You can sort of see around these hours, actually, because right now it's 8:30. So if we're looking at the time yesterday, we have 8 o'clock, 9 o'clock, 10 o'clock in the morning. So what do we have happening here? A reversal. So we call these reversals. Okay. Now you can see in a specific period of time you get that reversal, but London session was really bearish. So London session created a trend, right? London session creates a trend. New York session reverses it. Now, I'm not showing you something here that happens once or twice here and there. I'm actually showing you something that happens repetitively right now. So what I'm showing you doesn't just happen here and there, once in a while, swing trade that's, you got to really wait to catch, one trade a week type of thing. I'm not showing you a one trade a week type of thing right now. I'm actually showing you a repetitive concept, a repetitive strategy, okay? Now, timing is important with this, okay? Timing is important in understanding trends. Because you can have trends in the day, right? Like London session can trend. You can see how London session is very bearish, taking out this low here. You can see London session very bearish, weak, strong trend down. What does New York session do? Retraces it, or you could say reverses it. Now, when we talk about this, price rejection in Forex, right? In Forex and trading. Candlestick behavior, how the candlesticks look. The bodies of them, the wicks. So candlesticks are going to have bodies. Not all candlesticks are going to be equal. They're going to look different. But they give you detail. They give you patterns. They give you information on what the market is doing, especially if it's in an interesting spot, like a point of interest is what we call it. A point of interest could be a resistance zone, a support zone, or another high or another low. It could be a high on the chart. It could be a low on the chart. It could be a support level. It could be a resistance level. It could be a price. It could be a specific price as well. It could be a very specific price, actually, like a very specific price. Okay, so you have to understand this when you're trying to time your trades correctly. When you're trying to time trades correctly, okay, you have to understand this. Because most traders get in early, and then they miss the move. I actually showed this yesterday, because yesterday I got in on this candle up here. This green candle is actually where I first bought gold yesterday. I actually showed me getting in early, and then catching the move that I wanted to, which was down here, on this candlestick. So if you notice here, you have a green candlestick here, and I'm going to be talking about this today and show you guys a few examples as we go forward. Because yesterday we streamed for a bit. It took 2 hours though. So I had to wait. Market came down. Not reacting, not just buying. Was waiting for a better confirmation. Right? Something that says, okay, now I'm going to jump in because this drops. Most traders would just jump in. Okay? Most traders would just jump in because that's when gold drops, there's a lot of demand. If you look at gold, when it drops, it typically recovers when it dumps. If it dumps, it can typically bounce. If it dumps, it can typically bounce. Most traders will try to catch these moves, right? I do too. That's how I trade. Right? I try to catch the moves when it dumps, right? You see there's movements here on gold that you can see drop, right? For an extended period of time. Does that make sense? Type in the chat right now if everything I'm talking about makes sense so far, all right? Type in the chat for me if everything makes sense so far that I'm talking about, all right? Let me know. So, buy the dip, like everyone says in crypto. Buy the dip. You want to buy the dip, in crypto that we talk about buying the dip, right? Gold, better. It's better than that. It's better than crypto. When we talk about buying the dip, gold, traders like to buy the dip. Understand this. Do you guys see what I'm talking about so far? Right? Do you guys see what I'm talking about so far? Type in the chat if you guys understand, if you guys see what I'm talking about so far. Who also buys the dip? Traders buy the dip. Banks buy the dip. We even have proof of this. We went over this on one of our calls, actually. Traders like to buy the dip. We talk about the buy the dip strategy. Everybody wants to learn the buy the dip strategy. There's psychology to it, though. There's experience. I have experience around it with gold. Years and years and years and years. The buy the dip strategy. China bought the dip in March and in April. So who likes to buy the dip, right? When gold goes to lower prices, right, it often finds bounces or recoveries or reversals. You can see some of these drops here on gold that it's made. You have a drop down, price goes up. You have a drop down, price goes up. Drop down, price goes up. Drop down, price goes up. You can see just in the last days here of this price action, I've highlighted four times here where gold makes, let's say, an extensive drop for some hours. Because right now, again, we're on the 1 hour time frame right now. So every candlestick represents 1 hour of time. All right. So you can see 4 times here where gold makes an extensive drop. 4 times. Buy the dip. Classic buy the dip. Gold is common for this. It's an easy strategy. And most traders skip past things like this. All right. Because you can actually see some repetitive nature here of the market, right? It's understanding how price behaves, the mechanism of the market, right? You can see 4 times just in the last 2 days where gold has, let's say, crashed or dropped a lot, right? Whatever you want to say. And those have just turned into what we call recoveries or, again, reversals by the dips. Why? We talked a lot about that on call number 1. Why? A lot of the specifics about gold, we talked about 2 days ago, right? Why? A lot of those specifics and details about why people might want to buy gold when it goes to lower prices, when it dips, when it crashes. We talked about specifics like that on the other call, right? So make sure you guys tune in or try to catch up because there's a lot of information we talk about. And I've basically been building out a full course on this information. If you're inside the Inner Circle community, new course is launching very, very soon. And basically, like, I've been building a full course out for you guys on a lot of this information, way more in detail for the new classroom. We got a new course coming up in coming weeks. It's going to be really, really informational and educational. And those of you guys that are already in the inside that have access to the first course, you got more coming soon. If you're going to be inside of Inner Circle 2.0 website that I'm launching, literally in 2 weeks, couple weeks, guys, we're launching the new website. Make sure you guys are locked in because the new course is going to be fire. If you guys seen the first course, some of you guys aren't even done the first course, so you still have to watch that. Some of you guys still have to go through all those videos, right? Some of the stuff we're even going to talk about on this session, for example, right? Japanese candlesticks, why they're important. I'm going to go back to this in a minute. Because if you look at yesterday's trade that I took it live in front of you guys. It was right here on this candlestick. So this is all about getting better confirmations, right? Waiting for better confirmations, not just any confirmation. Here's an example of a trade that I took on gold once using price rejection and understanding price rejection in Forex, okay? And this is just to show you, this was a trade from December, right? And I'm still teaching these things since then because these things are very, very repetitive, easy to spot, easy to identify, right? So this is from months ago, a trade that I took using the same concept, same understanding of gold and price action candlestick behavior, right? You can see this was a huge buy, right? I probably called this out as a signal as well when this happened. But you can see these candlesticks. What I mean by these candlesticks is this green one here, right? With the long wick to it, small body. Long wick, small body. This is really important for gold. This might seem like basic stuff, but it's very important for the nature of gold because gold is the type of asset that doesn't just set up once a day. It doesn't just make one good trade a day. Gold is the type of asset that can set up multiple times a day. It can have different reactions at different times. It can give you a sell in Tokyo session, and it can give you a buy in New York session. It can give you a sell in London and a buy in New York, or a sell and a sell. It can give you different reactions at different prices, at different zones, at different times. So these basic things that I repetitively go over are important to understand because of gold's repetitive nature. It's not like every other asset class. Even though we can use the same concepts that we use on other assets on gold, you just have to approach it differently. You have to understand the risk with it, the psychology, the timing, its behavior, its characteristics. You can't take the same roadmap on Euro USD and apply it exactly to gold. Gold is different in nature. Gold is different in psychology, understanding like what it is and why it moves the way it does at the times it does, right? So, yesterday's trade was the trade we want to be taking, right? And I explained a lot about losses on yesterday because I took a loss before that. Yesterday's trade is the one we want to be taking, and sometimes you might get an early before that trade. So risk management is important as well. But when we talk about rejection candlesticks, a lot of traders don't train their eyes enough to see these things, right? When we're talking about what a rejection candlestick actually is, where they can be seen, right? Where they are, because if you look, if like my eyes can see many types of rejection candlesticks, right? Versus maybe a new trader's eyes. So here we're going to get more into this topic. Gold's pumping right now, holding 4,700. We're going to get into this topic today here. And I'm going to show you guys multiple examples. And I'm going to show you guys from two trades I took yesterday. They were both live, right? Both the trades I took yesterday were live on stream, by the way. So I'm not just going to show you examples that I even didn't use, but I'm going to show you 3 trades that I took and then a few trades that I didn't even take, all right? This is the main topic we're going to be talking about throughout this stream. I know some of you guys want to know what gold's doing, right? We're maintaining real quick, we're maintaining 4,700. I'll show you guys a quick analysis here. You have an engulfing candle here. See this? Green candle? It's engulfing. That would be an engulfing candlestick. The big green candlestick. That's important. That one's important to understand. Because if you look, the market has been in control since that candle. If you look at that, and again, we're still in the 1 hour chart right now. If you look at the top left, you can see 1H. This engulfing candle is 1 hour. After that, we have 1, 2, 3, 4, 5, 6, 7, 8 hours that have just stayed here. That candle has kept control, right? So it's showing bullish strength for gold. And it's sitting above $4,700. Yeah, this $4,700, it keeps coming back to it this week. If you notice, every time it goes below 4,700 this week, it finds buys. Like every single time it goes below 47, it keeps finding those buys right back up to $4,700. So real quick, we're going to go over this. And I'm going to stay on longer after I go over the stuff I want to break down with you guys today, because it's still early in the day and we still have tonight and tomorrow. We'll maybe take a trade on this stream. We're going to be streaming for a bit. Let me know if you guys understand. All right. Stay tuned. You never know what you're going to miss on these streams too. The market's all about patience. I showed that yesterday with gold. Might be rejecting 4,700 on the sells, might be trying to reject it. All right, we'll see. Maybe we're gonna find something today. Found 2 trades yesterday. So this is super important, guys. Most traders skip past this part and go to maybe super complex things that they think they need to really master before just even becoming a mastery at this. So when we're looking at rejection candlesticks, or even types of rejection candlesticks in the market, I've highlighted a few significant ones here on this chart that give you a pattern. I like to say information, right? That's what a candle tells you. A candlestick pattern tells you what the market's doing, right? It gives you insight. There's different types of candlestick patterns. And there's not just one specific candlestick pattern. There's different to learn, right? Bullish and bearish candlestick patterns, right? I talk about this a lot. And one of the candlesticks, even here, for example, we have videos, if you're inside the inner circle, that go over different types of candlestick patterns, how they work, me showing examples. And I made this a year ago, and still to this day, teaching the same things, because they're constantly there with gold, right? These candlestick patterns, they're constantly there, right? And these are singular candlestick patterns. One, right? Singular. There's double, there's triple. Singular candlestick patterns are very, very important, right? There are some of the things you want to be patient for. So remember at the beginning of the stream, I was talking about most traders don't know what to even be patient for, right? Some of it is this stuff here. What am I even waiting for? What is patience, right? I got to be patient. Because you might feel like you're patient if you're, not trading for 6 hours at the wrong times, and you're not waiting for the right things. You can just take trades randomly. We talk about this same stuff a lot if you're inside the inner circle. I've been teaching this for the last year, I'd say religiously. So when we talk about rejection, there's different types of these formations. So there's candlesticks like this one, the shooting star, right? That have a small body with a long wick. That's a bearish candlestick formation. There's candlesticks like this, like the inverted hammer or the hammer, right? Which is the opposite of the shooting star. That again have a long wick, small body. And then there's different types of candlesticks that have more body to them, right? These candlestick patterns that I'm going over right now, right? long wick, small body. Really, really important, especially to gold trading. Now, when you look at this chart, you might see just a few candlestick rejection patterns on the chart. And again, we're just on a simple 1 hour chart right now. And you can see times where the market goes up, times where the market goes down. For example, here, gold is pushing down. We can clearly see a strong bearish move on gold to the downside, right? After that move, what does gold do? It recovers. So where do most traders get this wrong? Is buying here on this candlestick, or buying on this candlestick, or buying on this candlestick. Not buying after some of these candlesticks. Before and after. Like, you got to think about trader number 1. That could be buying here on the dip, right? Trader number 1 maybe taking the buy on those candles, right when price immediately drops. Trader number 2 might be executing after this candlestick here, right? So what's a better confirmation, like buying right when price drops, or the one that took more patience, let's say? And we're just talking about one type of confirmation. We can apply this stuff with zones, prices. Like, another important layer would be where is this even happening to the left, right? Where are we to the left? When we go to the left, where are we? Where is price? When we talk about rejection candlesticks, where is it happening? It could be happening, like I said, in a support zone, resistance zone, an area, a point of interest. That, and again, it could be specifically a price. Okay? So if you look just at this part of the chart here, right, that I have highlighted, we're talking about price rejection. This right here is price rejection. This would be like a hammer candlestick. Small body, long wick. That's the behavior, that's the characteristic to it. Small body, longer wick. This is what we call an early sign. So long wicks, right? When we're talking about these long wicks, I'm going to write this out a bit. This is like an early sign of rejection. It could be an early sign. Maybe not fully confirmed yet, but like an early sign of rejection. Because you got to understand what happens with these long wicks. Any trader that's buying before is going to get stopped out on these types of long wicks, right? Because again, that wick itself was like a couple hundred pips, if I'm not mistaken. If you look at the size of the wick, this thing dropped $27, just the wick. So price was already dropping a lot before that. Price dropped like $50, $40, $30. Price was dropping a good amount before that. So that long wick, it's an early sign of rejection, but it's understanding what happens in these long wicks, right? Like, what is actually going on? Like, what most likely occurred here in this long wick? What took place? It's having that understanding about how markets behave, and that's just market psychology, right? Because you got to think, any traders who were buying before, right, would have got stopped out for sure, closed their trades, because there's emotions in there. Imagine if you're buying and you have this go against you, this trade go against you. You're going to have emotions involved, right? Market's going to be going against you. You're going to close your trade. No one's going to want to hold that trade, right? You're wrong. You got in early, right? But then you're going to miss the real trade setup, which trader number 2 is executing on, which could be after the long wick, or understanding long wicks could be an early sign of rejection. And then you have this green candlestick here, right? So here's where we could have taken one trade on this green candlestick realistically. That could have been an entry, stop loss at the below the long wick or below the green candle, right? We could go below the the red and green candle. Stop loss under the wick if you're trying to be more like breathing room. There's two places you could place a stop loss in this entry, right? Because there's an entry here. Market ends up going right back to the highs there. Big move that it made. This would have been a good entry to take on gold. You would have had to be patient. It's similar to the entry that I took yesterday. Now, again, if you look to the left, right, market is trading also in an area of support. It actually wicks underneath that support. So that would have been a good trade to be taking. And again, it would have taken patience. You would have had to wait like 4 or 5 hours. Not just sit there for 4 or 5 hours, but it took that amount of time for the market to set up like that, right? So next setup, you can see markets pushing up, pushing up, pushing up. You have this green candle pushing up, green candle pushing up. So you have bullish candles pushing up, and then you get these pauses up here. So what are these small candlesticks, right? These are like dojis. These are more like neutral, smaller candlesticks, dojis, right? These are a bit more neutral. And depending on where these candlesticks are happening, because as you can see, the market pushed up a lot here for 1, 2, 3, 4 hours. You had a good push up in 4 hours there, right? Now you have these neutral candlesticks happening at like a higher spot, right? So what do these neutral candlesticks tell you the market is doing? Like these dojis, gravestone dojis, dragonfly dojis, even some of these smaller like bearish or bullish candlesticks, like this green one. See this small green one that I'm highlighting? I'm going to make it purple or something. That small green one. Even that candlestick gives you a sign of information saying, okay, this bullish move is coming to a pause. That's what neutral candles, why does it not let me spell it? That's what neutral, I suck at spelling these days. Neutral candlesticks, whoa, really identify you as more of a pause, right? Like pausing here in price. Slowing down, pausing, consolidation, exhaustion, reversal. Okay? So you could see like gold pushes up after making that bearish move down, pushes up, pauses up here. It starts to pause. You know, okay, probably shouldn't be looking for bullish moves. I don't want to be super bullish up here, right? That's understanding this too, because what is FOMO? Anyone know what FOMO is? Type in the chat if you know what FOMO is. Most of you guys should. Maybe you've heard of FOMO. If you've been trading for a while, you've probably heard of what FOMO is, right? FOMO in trading. So that's the fear of missing out. So FOMO, the fear of missing out, is trading is anxiety-driven impulse urge to enter a trade because you see price rapidly moving and fear missing potential profits or observe others succeeding it. So it typically causes traders to throw out their strategy, chase overextended price moves. Overextended, right? Overextended. So here, whether I'm bullish or not, let's say you're bullish. Let's say you're just fully bullish. It probably wouldn't be a good idea to be bullish here then, right? Same goes for, let's just say the market's dropping like this, and now this candle pops out. I probably shouldn't be looking for sells, whether I'm going to buy or not, right? Whether I'm going to take a trade or not, I probably should be looking for sells here then, because this candle is forming just as if, okay, we're getting a bit more neutral. There's a pause here in price. And then what do you have right here? You have that shooting star I was talking about before, right? Candlestick pattern, shooting star. You have that there. You have the hammer. This would be a hammer, right? Followed by a bullish rejection candlestick. Up here, after the extended move up, you have the market pausing, pausing, pausing. So here is your shooting star as well in there, a bearish candlestick. So I actually, I took this trade myself. I tried to send it out as a signal. Some people might have got in. It didn't. We got in. I got in late. Let me see if I can find it. Show you here, for example. I actually got in this trade myself. I made a video on it for the inner circle. Going to be posting it. I actually took this trade myself to show you here. I made a video on this for the inner circle. If you're inside the inner circle, this is like videos like this are going to be posted on like the new website. So I made like a video of this trade. The thing I'm talking about right now. So to tell you, like, I'm not talking about just random shit that's like, yo, you could have took this trade here. Here, you guys could have sold here. You could have bought here. Because the next trade, like this trade I took live over here, this rejection candlestick, which I'm going to get to. I'm going one by one here. Okay? I'm going one by one. So I actually took this trade. Videos like this are going to be posted in the new website for the inner circle. So you see here, it hit my take profit. It ended up hitting my take profit. But you see here, for example, like where I entered, where I'm taking my sell. This trade, I ended up closing it at like when it hit 4,700, like $2,800 profit on this trade. And I'm talking about like the same thing even I'm talking about a little bit right now, right? About those pauses there. You might see me circling some candlesticks. So I actually took this trade here. I made a video on it. Here, as you can see, talking about those pauses, those small, you can see here on the broker I'm trading on here on my funded account. A couple red bearish candlesticks there. This part is important to understand. Because if you can master this stuff, if you guys can master this stuff, it'll change the game for you. It'll change the game for you. Fear of joining in. Fear of missing out on the inner circle. Yo, don't miss out. Fear of joining the inner circle. No, I'm kidding. Fear of missing out. So there you have your shooting star formation. Okay? Bearish move. Imagine you're seeing one of these green candles. See this green candle here. Most traders are going to be buying on that green candle. Like, oh my God, market's going to go up. It could a bit more because there's momentum. But then you have to dissect and just be neutral. Notice how these candlestick patterns are called neutral ones here, right? You got to be neutral with what's happening in front of you. Like, okay, this is happening. Let me not be emotional. There can always be a better trade, right? A better trade looks like this entry here, right? Boom. Or this sell here. Bam. Which I took, you can see right here, right? This was a fire trade. I tried to send it as I sent it as a signal. It didn't wick back to like 20. Some people got in as it was dropping. It was like a late one. And yeah, trades like this are trades that I take a lot and strategy that I teach every single week. All right, make sure you guys are locked in. So there you got your shooting star. Where does that move end? Right? Next rejection candlestick right here. You can see a green candle. So I'm highlighting some of these rejection candlesticks, right? With the circles, the yellow, purple circles, right? On whether you were buying, selling, you had your bias. Like if you were just bullish, like you wouldn't want to have been buying up here, obviously. Whether or not you're taking sells, you're catching those sells, right? You don't want to be bullish up here. You want to wait. Your trade would have been right here, right? To be bullish. Next trade would have been here. Rejection candlesticks. You have that green one that I highlighted, right? So when it comes down to looking for a trade, it's not just reacting on everything. You may have your bias formed because you can see this red candle. Most traders would buy here, right? Like I gotta buy. Just like most traders would have been buying late or early over here. Where you would have want to been buying would have been after this candlestick, right? That would have been better. And market did give a move. It didn't go up like thousands of pips, hundreds of pips, but that would have been where you would have been positioning yourself in terms of execution. Because that's how you're going to get yourself in high probable trades that move thousands of pips, hundreds and hundreds of pips, is by executing in a probable state of price action, right? Here you have another shooting star formation right here. Right, you can see from there, that candle, market went down a lot. There was a couple green ones in between. I thought, for example, we were going to get a trade here, right? So I had a trade here that didn't work. I took it buy here on gold. It didn't work. I closed it before it dropped down a lot. I closed it at like 85 or like 88, like here. Closed it before I went down even more and more and more. Recognized, okay, this is the trade. It's not reacting. I ended up getting out. And this is where I had to stay patient now if I was trying to take another trade. I didn't revenge trade. I didn't FOMO. And I was even saying all this live yesterday. I didn't take the trade 10 minutes later. I didn't take the trade 20 minutes later. I had to wait for this candlestick here. This candlestick right here. Right? So, every strategy works, but it's not going to work 100% of the time. Right? My strategy didn't work yesterday here. So I had to wait for the next time it set up. And that was the trade I wanted to be taking, was this right here on this candlestick, right? If you were live with me yesterday, we were live on this candlestick. Market was actually testing a key area. If you look to the left as well, it's like testing this low. It's at a good price as well. When we talk about whole numbers, which on further sessions, we're going to be talking more about whole numbers. Wanted to talk about rejection candlesticks more on this session. Okay? Right here, that was that trade. All right? What's gold doing right now? Just trying to keep an eye on gold at the same time. 4,700. Chilling. Not any trades right now. We've been on for about how long now? An hour. Right? Just wanted to break down for you guys some of the concepts and some of the things we're going to be tying together on more sessions as we go forward. All right? This stuff I'm teaching right now, guys, is repetitive. It's hard to teach it all in 45 minutes. Realistically, like just being real, like I could spend hours all day teaching this, hours, right? I could go more in depth, way more. There's way more we could dissect, right? But the point I just want to get across is one simple concept today at a time about the power of rejection candlesticks, right? Why they're important. Because yesterday I even took a trade live with you guys on this candlestick right here. Now, I was in a buy on this candlestick. Yesterday's session was actually legendary. Like, yesterday's stream was legendary. I'm going to show you exactly what I'm talking about. Where is it? For example, am I in the trade here? Oh no, that's that I think was here. I'm gonna show you what I mean. How yesterday's session, here it is, was actually legendary. So here's the buy yesterday. Okay, that's the buy I took yesterday. Look at, you can see where I was entering that candle. So I took this live on stream. Okay, this trade, I ended up coming back on stream. This was a solid trade on gold, okay? Now, on this same stream, I got out the trade. Let me turn this off. So peep this. This is the buy yesterday. Yesterday was a legendary stream. Like what I did between the two streams, I was like just about to crack 400,000 on the account. Literally 400,000 was getting like just there. The stream I did before this, I took the buy live. I had to wait 2 hours for that buy though. This market was dropping. 2 hours. Some of you guys might be like, oh, I haven't. Some of you guys real quick. Some of you guys here on the stream might be like 2 hours. That's a long time, right? Well, look at the profit, 2,000 US dollars, right? 2 hours, 2,000 US dollars. I mean, to get the trade. You got to think about what trading is. It's a skill set. It's a profession. And think about jobs. Think about careers. Think about people like nurses or business owners, lawyers, doctors, right? Surgeons, people who do practical careers, right? They have to spend hours and hours and hours and hours doing those jobs to give them their income, right? Trading, you can print someone's monthly salary in one day, right? And you might have to wait 3 hours for that trade setup, 5 hours. You might have to put 2-3 hours in the day to make someone's monthly salary. In a week, you can, in a good month, you can make someone's yearly salary, right? You can make what someone makes in 6 months to a year in a good month with the right trading, with the right execution. In a day, you can print, in the right trade, in a day, that could be someone's monthly salary, realistically, right? So some of you guys might be like, yo, that's a long time. You had to wait 2 hours for that trade? That's not a long time, really. When you're looking at the profession, the skill set, the job, right? The job to make money, right? Everybody wants a 5-minute answer, a 5-minute trade, a 5-minute question, or everybody always wants a signal right away. Where's the signal? Where's the trade? Most people don't have the ability to wait for the trades, right? To wait, to be patient, right? You're gonna have to wait, right? If you really want to execute at a high level and you want to execute, effectively means being able to make what someone makes in a month on one trade, right? That's effective execution. You have to wait for the right setups, right? You have to know what you're waiting for. And you have to have the ability to be like, you know what? I know this movement happened. I'm not going to chase the trade. It's like if you weren't in this buy, you have to be like, okay, I missed the move. I'm not going to look for buys up here now, right? That would be like FOMO, what we were talking about before, right? With fear of missing out, right? That's when you see a price move rapidly moving in fear of missing out, right? Or overextended prices, chasing overextended price moves, right? This yesterday, that's a great example of like an extended price move that most traders would probably chase, right? Then, what did we do on this exact same stream? I ended up taking a sell. On that exact stream, I ended up taking a sell on gold, right? On the same stream that I was in that buy. I got out the buy. Why did I get out? I ended up getting out the buy because this candlestick. So these are the lessons. Like if you're in the inner circle, these are the things when we go live every day, when we start ramping up every day, and when I stream every day again, like I was yesterday. I streamed for 3 hours yesterday, right? Live trading. These are the lessons you learn in those moments if you're there showing up, where I'm taking a trade, explaining why. Because yesterday I took this sell live, but I got out the buy. Why did I get out the buy? Because this candlestick right here. I got out the buy because of this candlestick. There's one thing I want you guys to understand. I got out the buy. All right? Let me know if you guys have any questions in the chat real quick before we analyze gold. We're going to analyze gold real quick. Let me know if you guys have any questions. We've been on for a bit over an hour now. Let me know if you guys have any questions in the chat. We're going to analyze gold. Type them in the chat if you guys got any questions. All right. We've been live for a bit over an hour. Yeah, a lot of traders, like, yeah, if you guys got any questions, maybe I'll answer 2-3 questions. If I see any good questions in the chat, I'm going to analyze gold for a little bit. Hopefully you guys got some value today, took notes. Make sure you guys go watch day number 1 if you missed day number 1, because there's characteristics of gold and nature and stuff that I talked about that's important on day number 1. And we got a lot more stuff to talk about. There's a lot more stuff to learn. All right. We're going to analyze gold in a little bit. Hopefully you guys learn some stuff here. Fear of joining in, fear of missing out. This is called U-Funded. The broker that I'm trading on is U-Funded. Another broker, I could put the link in the chat or in Telegram, Discord after this call. I'll put them in Telegram after this call. I'll put it in Telegram after this call. Okay, there you go. That's a good point, Stefan. Good point. Good point. Good point. All right. You're not trading 100K when your max daily losses. That's a good point. That is a good point. And that's like, look how I trade the account that I'm trading with almost 400K in now in it. See? So you got to think about that 1%, right? When you're on an account like that, that's actually a really good point. I like what Stefan said in the chat there. If you guys notice, that's actually a really good point there. Really good point. Facts. Realistically, think about it. Yeah, facts. Like, this account's almost at 400,000. So 1% of this account, that's actually facts. If you guys look at what Stefan said in the chat, that's actually facts. Most people don't understand when you're trading a 100K funded account, you're not trading 100K. You have that max daily loss, right? So that 1%, you got to think about that 1%, guys. You got to think about this, right? 1%. Let's do it from my perspective here. Let's just say 1% is $3,900 for me, right? Okay. Seven has a good point. 1% for me is roughly 4K. Right? So if I'm going to take a trade and risk 1%, okay? If I lose that trade, like letting me, like 1% risk and I lose the trade, right? Think about the money it is. Now that's $3,900 I just lost, right? 3,900 bucks that I just lost, right? And some of you guys like have like this U-Funded doesn't have like as much rules and restrictions as most funded accounts do, right? It doesn't have any challenges and stuff like that and rules. It just has max drawdown. It just has max drawdown, okay? So if I risk 1%, 3,900, and I lose, what does the next trade have to be then? Right? What do I have to risk on the next trade? Right? Realistically, if you're gonna stick to 1% or whatever, like these percentages, you got to think about the money and your capability of losing it and making it back just as easy effort on the next trade. Like, you don't want to risk too much that you can't, like, you're not used to. Like, I can risk 3,900, but because the rule, I don't want to go too much in drawdown. Like, the reason you see me risking gradually on this account is because I don't want to go too much in drawdown because I want to take trades. So it's better for me to separate this $1,000, right? One trade. $1,000 another trade. I could spread it out, right? I could make 1% risking $1,000. Realistic, like having gradual risk, I could spread out my trades, $500, $1,000, $800, $1,200. Spread the risk around. Like if I was trying to take whatever trade, right? In some cases, like when you have those drawdown limits, like what you're risking, like you might be risking 1%, like, oh, I'm risking 1%, but like you might not have the capability now of taking another trade comfortably because of the risk. So you have to use the account as leverage even for just small trades. Like realistically, trade history, you have to leverage the fact that you can take small losses like this, or just like, see these losses, for example, those are nothing, right? You can't like hold like an emotional attachment to every trade and let it hit your stop loss every time. Like, you don't have to let a trade hit your stop loss all the time, especially if you're trading on big accounts like this. All right. Lot size just depends on the setup. It just depends on the setup at times. Just depends on the setup. And how, like, if I'm having a good week and I'm on it, like, it just depends on even how I'm feeling, my mood, my energy. Like, if I'm, sometimes a little more risky than other times. Sometimes I might be a bit more conservative. Right now, I've been just trading on it. Like yesterday, I was trading with 1.5 lots, 2 lots. Gradually though, like just, like nothing. Like that's easy on this account size. On what time frame is best to watch candlestick rejections? I would start with 1 hour and 30 minute are good. 4 hour. So start on the 4 hour realistically. Like right now, gold might be making a bearish 4 hour rejection candlestick. See here? See how the 4 hour is turning? This could be flipping into like a 4 hour bearish candlestick on gold from the looks of it. 4,700. And we are at 4,700, maintaining 4,700. We've been on, for anybody who's maybe just jumped on, we've been on for like an hour now. If you guys missed this stream, make sure you rewatch it. There's a lot of notes, a lot of value to take on it. Small accounts like that, like we got to talk about that. Like if you're in the inner circle, I talk, like when we have like our weekend talks, like sometimes I go into psychology of account sizes, risk of account sizes. As a small account, like realistically, it depends on your experience and your plan with your trading. Because $280, I would just trade with 001s to start, Something like $280, $300, I would just start with the smallest amount, okay? Because you can still make money, you can still execute. Like, it's not about account size. I've proved this. My students have proved this too. I have students who have proved this time and time again. I have students who have proved this, right? Like if you look at this account, this is a $483 account. That's a good trade for the account size with a small lot size. So when you're trading with a couple $100, you want to just start small, gain the experience, gain the skill set, gain the confidence, gain the execution. This is execution. That's a good trade. Some might say it's only $61, but I look at the execution, I look at the account size, I look at the lot size. That's a good trade, right? It's only $61. No, that's a 600 pip move, right? You want to get good at these, right? Catching moves, right? Understanding catching moves. It's not about the lot size. It's not about the account. I've had students who have proved this because I've taught the psychology around it. There's some psychology around this. I had a student just last week who went from $87 to $2,100 last week. This is on Andrea. Well, he's been in the inner circle for a while though. This guy's been in the inner circle since I think this time last year, maybe July or August, I think last year, around there. Because I remember in September he killed it in September. So for example, one of my inner circle students, I'll even show you, in September he killed it. Look at this. It's not about the account size, it's about the execution. It's about the execution, the psychology of risk. I remember in September, this guy went on like a roll. I think maybe he posted, I think I saw his name recently too, wherever it is. I remember him crushing it. This is my, wait, oh, here he is, there he is. Yeah, there he is, like, this guy's crushed it with the strategies I've taught, the psychology of small account trading. I have multiple students who have learned, who have applied and practiced the psychology, understand the psychology of this, like starting with $100. It's not a lot of money. So there's execution, there's risk tolerance behind it. I have students who have done results like this. Crazy. $100 to $3,000. Yeah, you can see like his 2026 started with 5K profit, $100 to 2,000, and then $100 to 3,000. So he did this, 100 to 2,000. Guys, like, think about that. Like, that's like, when you achieve a result like this, it's good to stop for a bit, try to do it again the next month or something. Like, when you achieve results like this, because if I did this with like $3,000, $5,000, it'd be a big return, right? So results like this are achievable. Like, someone asked about the $280 account, what lot size? Well, like, realistically, it's about starting the smallest you can, because you don't need a big lot size. You need the right trade setups. You need the right execution. Okay? I remember in September, even in September, I could find him from September, and this is I'm just showing the person that did $87 to $2,100 last week. Look at this. So this, let's be real here, because we don't have time to waste time of being sugarcoating shit and trying to be like, oh, that's like, let's just be real here. This is high leverage, right? This is high risk, high leverage. They're obviously not taking random trades. I can see why they're actually taking a trade here. 47.50. If you know, you know. 47.50. If you know, you know. Those 50s, zeros, 25s, 50s. If you know, you know, right? So I don't think it's about the amount. I think it's the experience, the risk tolerance, the trading psychology, the planning, and the trade setup. Because what a person like this kind of does, like, I've taught different styles of trading. There's different styles of trading. There's this, right, which is different from this, okay? There's this style, and then this is different. This is higher risk. So what does higher risk mean? Higher reward. What does high leverage mean? High risk. Leverage is a double-edged sword, right? That's why when you're trying to do stuff even like this, you have to start small. Because, like, if I start the week, like week number 1 with $100, right? $100 in the account, week number 1, and I'm trying to do something like this, okay, week number 1. I could try to do that every week. This is what I used to do when I first started trading, because when I first started trading, I was a degenerate. 17, 18-year-old, having my paychecks go into trading. I would put like $250 in an account and see what I could do with it for the week. That's how I traded in the beginning, because I had a job full-time. So I would take a certain amount of money from my paycheck and I would fund an account every week. Every week I would just fund an account. And I'm going to be completely transparent and honest with you here. There was weeks I would 5x, 10x the account, and then there was weeks where I'd blow the account completely. What was I doing the next week? Funding another account. That was my life at 17, 18, 19 years old, right? Working a job, learning how to trade, going to 20 years old, wanting to become a millionaire off of trading, right? That was 10 years ago, okay? That was 11 years ago. 11 years ago, okay? That was 11 years ago. So that's how my trading journey started, was working a job, showing up to the charts when I could. After work, I would trade London session. I would take the bus ride home, trade London session, right? And then I would come home and trade London session. And I would trade GBP Japan a lot, GBP USD. And then I started graduating to gold after like 2 years. But I would literally put $250 in an account and I would trade that account. Bro, there was times I would take $250 to 4,800, numbers like that, 3,000, 1,200. I would either withdraw or try to keep going. Most of the time, if I kept trying to grow the account, if I flipped an account, most of the time, if I kept trying to grow it, I would end up blowing the account. So it was a lot of learning process. But what it did is it applied me. You know, I took those moments where it was like those $250 accounts, and I took it to 2,000 or whatever. Even if I blew the account, I took those experiences and said, okay, I got something right here. You know, I was younger. That was 11 years ago. You got to remember, that was 11 years ago. So I was younger in terms of development in the brain, right? However, I took what I did and said, okay, I got something here. I'm doing something right. I can grow the account, even if I blew the account, right? But it might sound like gambling, but I was learning how to execute. I was executing. I was learning. I was learning risk. I was really learning risk tolerance for my level at that time, because at the time, $250 felt like a lot, right? So for me at the time, 11 years ago, $250 in an account was a lot of money for me in US dollars. When I first started, it meant it was heavier to me then than what $2,000 in an account would be now, or $5,000 in an account. $250 then weighed more in terms of how heavy it was emotionally, how I was attached to it financially. What $250 meant for me then was more. It was heavier, right? So I learned risk tolerance because that was more for me then than what $5,000 or $2,000 would be now, let's say, in a trading account, right? So I learned a lot of applying myself, right? It might sound like gambling and this and that, but you're going to learn more. You're going to learn more doing that than you will in a funded account, right? But gold is flipping on the 4 hour. Yeah, it's looking like sells. It's looking like sells. 4 hours flipping. I'll go for small sells, all right? It's looking like sells on gold. It's looking like sells. I'll put my stop loss above the wick. Stop loss placement, someone asked, so I'm going to answer that question here live right now with a trade I just took. Stop loss above the wick, for example. That's stop loss placement. If you really want to just get basic into it, where do you put your stop loss? You use structure, highs and lows, above and below things, right? Entered this late because today, the next 14 days, guys, I just want to educate you guys a lot, because after these 14 days, I'm going to be streaming inside the Inner Circle website. So I'm not going to be streaming here on YouTube as much. Okay, you might see me here popping up on YouTube kind of when I want to, maybe here and there, once or twice a week. The daily streams, and I mean the 2 times a day streams, the long streams, they're going to be happening inside the Inner Circle website, where I'm going to be live streaming every single day, all right? So these next 2 weeks, guys, I'm going to be going over a lot of information. Take it into consideration, apply it, learn it, because you're not going to be seeing me stream here as much on YouTube as we go forward and my new website comes out, all right? It's going to be some exciting times coming. Oh, look at that. That's how you just know candlestick recognition. Yeah, that was late. That's why live trading is different than educating. I want you guys to understand 2 things. Educating is one thing. I came here to educate you guys today. If I was just live trading, we probably would have gotten this. I would have gotten this way earlier, probably. That's how you make $200 real quick, though, without even trying. Or 300. That's how you make a quick little bag. Oh, yo, we might hit the 400 on this stream, yo. We might crack 400. Let's see. Let me get my crosshair ready. Yo, we might crack 400 on this stream. We're going to 1 million this year, dog. All right? By the end of the year. Road to the 1 million. It's one trade at a time. One trade at a time. All right? And some of you guys want me to... I was saying yesterday, some of you guys want me to full port the account and just do one big trade, make 50K, 100K. Don't worry. That day will come. It's all about the setup. It's just same execution. The bigger trades will come. Ah, man. It's because it's hitting that right there, right in the middle of that engulfing. Yeah, we just had a... I should have closed there. It's a tight trade. The 4 hour could flip. It looks like the 4 hour is trying to flip. Gold, I have a mixed bias on gold right now. I have a mixed bias. There's bearish and bullish. Longer term, I'm bullish, looking for buys. Longer term, I want to look for those buy setups. When it dips, when it crashes. But yeah, there's been sells, there's been buys. We might, maybe I jinxed myself there, but let's see. If this 4 hour, how much time's left on the 4 hour? Yeah, just open, so there's still time. If this 4 hour flips, because look at all these wick rejections here. Ew. Really, look at gold, all these wick rejections. that does give you like, okay, some bearish pressure there. Like you have like wick rejections happening. If this 4-hour closes bearish, market could come down. Someone asked about stop loss placement. Like when you're you got to think about where you take your trades. Like it's about where you take your trades, right? Because I don't have to hold my trade until my stop loss if I know I'm trading in a good location. So like yesterday, for example, I took a buy here. My stop loss would have to go behind me at a previous structure, around a previous structure, okay? If I'm buying something lower, maybe at a support, a lower zone, a lower low. So I gotta look behind me. I use structure in that sense, like where should the stop loss go? It's not about how many pips, it's about where I'm taking the trade and where structure is too. I want it to go behind me. In this case, it's like what makes the most sense in this trade that I quickly got in is like putting my stop loss more here. Not that I have to hold the trade till there, but just for now, it's like, okay, that's my maximum risk, right? I don't have to hold the trade infinitely, like till it hits that stop loss if it goes against me. Like that's just like a good location. I would say a proper location to place it, right? Is at those highs, right? Since I'm selling, like I don't want to be too close. If I'm buying, it's like where am I taking the trade? Where's structure, right? Like if you're catching buys in here somewhere, like you got to look under you. You got to look behind you. Like where's the safest play? It's this low, right? When you're taking these buys, in a sense. We might crack the 400 live on stream. Yesterday I hit it. Like I hit it yesterday. I was above it, but I didn't close the trade at like $2,200 profit. I closed at like $1,800 profit. It is what it is. Tough times, first world problems. Like if I want to make $300, like when you look at an account size like this, it's like what income can you make? What capabilities do you have? Because like if I wanted to print $200 to $300 a day on this account, that's easy. That's like break even sometimes for me, right? Like with the amount of trades I can take, if I spread the risk out, because some of you guys are looking at these accounts wrong. Like you're leveraging the money, right, to have more of an income, right? Like if you want to make $500 a day, you don't need to risk 1% of your funded account, 2%, 3% max risk of your funded account to make $500, $300, $200 a day, right? That can add up. You got to look at income and leverage. You're leveraging money to make more of an income, right? Like some of you guys work jobs that you make $2,000 a month, right? $3,000 a month. You can leverage account sizes like this to make $250 a day. Not that you have to make 6 figures a month on an account like this. 50K in a month like this. You can leverage it to make 20K a month, 10K a month, 5K a month easily with the same execution that you might do on $100 accounts, $200 accounts, $300 accounts, right? If you already know it, oh yeah, we're gonna crack the 400 live on stream. There you go. Maybe this one. We could have done it yesterday. I might just close it this time. I had the ability to yesterday, but squeezed in gold there. That's. Went over a lesson. Like I was teaching you guys for like an hour straight. So like you guys can see I dedicated my time to you guys to make less fucking money. All right. I'm up $312. All right. I dedicated my time to you guys to not live trade and lock in. Like if I didn't stream today, I would have just probably taken these sells and maybe got in earlier. Maybe got in on my other account too. So, all right. I'm trying to teach you guys the craft here, the skill set. All right. It's not about you. You can feed. I can feed someone a fish, right? But I'm trying to teach the man how to fish. All right. I've been fishing for 11 years, yo. I've been fishing for 11 years, dog. Yeah. Oh. Can we get it? It's not. Well, 4 hours flipping, and if it closes bearish, it's probably gonna dump. Maybe it buys next week, or Friday. If we dump Fridays, tomorrow's gonna be an interesting day. Trying to crack that 400 live on stream. Maybe we can hit it. We're almost there. Road to 1 million though. One trade at a time. It's one trade at a time, guys. It's one trade at a time. There you go. Broke it. GG. Sells up. Held the 4,700. So I'm going to talk about why I took that real quick. Because it might have seemed like a quick decision. But you got to think about my brain. I have an 11-year brain in the market. All right. So it might seem random. But if you look at $4,700, this is important. Okay. Why is $4,700 important? Well, that's a whole number. That's a psychological level. And the reason I closed it too is because we're literally trading into this low. It could bounce off of the low. We're literally about to trade right into that low, you can see. That's why I closed it. We're coming right into this low. So I'd rather just close it. Hit my goal. Like I already hit my goal. We still have tomorrow. We still have tonight, London session tomorrow. So I could probably get it. We'll see. Maybe finish the week even above. We'll see where we finish the week at. It might seem like a random trade, but if you look at, like, it doesn't take me long to observe things, by the way. After 11 years of trading, like, it doesn't take me long to make quick decisions when I know they're there, okay? One thing is, like, the 4 hours been coming up here, and I was even saying it before I took that trade. Like, it looks like the 4 hours, like, flipping bearish. $4,700 might hold. Even before I took that trade, I said it. You have, like, wicks happening there. Kind of ugly price action, right? Like, ooh, it looks like it's exhausting out. Wick rejections. So it looked like in that moment, it was getting ready to literally flip how the candle was. Like, if you backtrack this session, like, you'll literally see that candle was, like, flipping, right? So I was like, I got it. This is now or it's now or never, basically, moment where sometimes things are literally just in the moment, quick like that. Like you guys see, I spent an hour and 20 minutes with you guys to make $480. That's what I mean. Remember what we talked about yesterday and today about time and patience, right? Time and patience. I spent a little bit over an hour with you guys and I just made $480 on my account. Grew it there, broke the goal, right? Average person will clock in for 10 to 12 hours a day to make what they make at their job, but not willing. Like some of you guys aren't willing to clock in 3, 4, 5 hours a day to try to make 6 figures, get to 6 figures, multiple 6 figures, 7 figures, right? You could scroll all day on Instagram, get motivated by everything you see online and be like, yeah, I'm going to 7 figures. I want 7 figures. But if you don't put in the work, the actual work, the grind, you won't get there. If you think 1 hour a day, 2 hours a day is going to get you better at getting there, maybe you're just maybe you're just fooling yourself at times. Because like most people spend 10, 12 hours a day at their job. They come to trading and they're like, damn, 2 hours? That's a lot of time. I got to watch videos. I got to study the charts for 2 hours, 3 hours. Damn, yo. That's what we call put the fries in the bag, yo. Like, you know? Damn, I could have held that trade too. Shit. Fuck. It's all good. I would be up $800. See, I would be up like 800 right now. So, like, think about that. The time I spent with you guys, $800. Think about that. Spending an hour, 2 hours a day to potentially make $800 in the day, $1,000 in the day. Trading has that ability, right? Or again, even a monthly someone's monthly salary on a good trade. If I held this could have been like this would have probably been over $1,000 by now. Fudge. There we go. The confirmations were there though, and if you look at 4,700. It's been an interesting level. We've been more bearish at it. Like we've had some moves above 4,700, but that was part of why I was like, yo, okay, this is going to hold 4,700. Look at this. Now we wait for the buys. Now we stay patient for the buys. Now, literally, what am I going to do today? See how my brain's already thinking of forward. The next, I already know where we're, I already know what to do, where to go, what to wait for now. I caught that sell, should have held it. Fuck. Shoulda, coulda, woulda. Shoulda, coulda, woulda. You know, like you see, like 47. If you notice 47, like you look left. So if we go 47, you've had rejection there too. Let's look at where that rejection comes down to. Like, where does the rejection come down to is one thing you can look at, right? If we look at 4,700, there's been sells. See here, sells, comes down. This one comes all the way down to 46. And we come down to like 50s, 46.50, below 46.50, 46.25. Here we have a sell down to 46.50. Look at 4,700 for example. You see sell pressure. Even there's breakouts, bounces. There's a nice bounce there. Look at that buy, like perfect buy at 47. Like damn, shorty, you fine. Like fuck, that right there is nice. 4,700, we go below it. You can see bearish pressure. You can see reaction there, but you can see bearish pressure underneath. That goes to the 46.50s. A lot going to the 46.50s here. 46.50s. Here you got down again, 46.50. Here you got, again, bearish rejection at 4,700. Here goes down to like 40. Again, down moves. There's some bearish pressure underneath, right? Interesting, right? You can see it, like that level. Like I wasn't trying to buy there. It looked like in the moment, and I looked at dollar's price action. So one thing I did with my eyeball was looked at dollar and saw it at like 630. Like dollar was I saw dollar at like 0.630, and I was like, oh shit, yeah. That's why I like acted like that. Like you guys saw me just act on something that was there like quickly in the moment. Like okay, I got to get in this sell. Like, that's trading. That's just trading. You could sit there, you could chill, you could be chilling here, and then, whoa, okay, it's time. Not always having to guess, predict, like, right away, right when you jump on. That's why I like to spend some time on these streams, even. I like to get into, like, teaching mode a bit, talk about some things, get educational, before I look for a signal or a trade right away. Everybody jumps on, and I feel pressured sometimes. To you need it. Where's the trade? What's gold doing? Where's the trade? Where's the trade? Usually, like for me, it's better if I just jump on, teach a bit, then look for signals. Like because it gets your brain active, it gets your brain awake, right? So 4,700, there's pressure underneath it. Usually, like we can see pressure underneath it. What are we at right now? We just tapped 75. All right, nice. Interesting. We're going to wrap this session up, though, guys. We've been on for an hour and 45 minutes. All right. We're going to go live in the inner circle. If you're inside the inner circle, I'm going to go live literally in 15 minutes. We're going to continue this session inside the inner circle. I wanted to keep this session educational, informational. All right. We're going to go live if you're inside the inner circle. Chop it up. Locker room talk. We're going to talk shit. We're going to talk... You're going to see a different guy over there. No. Yeah, we're going to go live in the inner circle. We've been on here for an hour and 45 minutes. I hope you guys got value on this stream. I hope you guys took notes. All right? If you're inside the inner circle, I'm about to go live literally right now. Things are looking interesting, actually. What's silver doing? Okay. Okay. Is this a buy the dip? What? No. Could be turning into one. Well, this is where we want to stay patient. It's better to, I like, in moments like these, I'd rather price go down a bit more, stay patient. This is where yesterday type of patience comes into play. Not chasing, because like gold can bounce, like it just bounced, but not chasing those bounces too quickly. Those immediate reactions. But yo, if you're in the inner circle, I'm going to go live right now. Literally, I'm making the link right now on my other monitor. So I'm creating the link right now. If you're inside the inner circle, I'm about to go live. And I'm going to drop the link right when I wrap this session up. All right. So I'll see you guys that are inside the inner circle. We're going to continue this session. And we're going to go live inside. I see. All right. Circles in the chat. Circles in the chat. Circles in the chat, bam. Circles in the chat. Oh, the sell would have been fucking sexy. Hey, I was in it. I was in it a bit. Light day. That's a light day. A light day for me doesn't take much effort. Like a $400 day, a $500 day like that, it doesn't take much effort. But hey, guys, look it. We at 400K now. So that's an up. Yo, gold has just been chopping around. Yo, what is it? Wait, is it China? Trump's in China right now. The war, are things escalating or de-escalating? Who knows? Type in the chat if you know if things are escalating or de-escalating. Yeah, it's building up for something. Gold's building up for something. Like, it's really building up for a big move. It's been just chopping around the last weeks. 2 weeks now, almost, just chopping around. It's in this low. That's why I closed the trade, because it was in that low, though. So, like, realistically, if I was still holding on, it was a good close, because, like, I closed it because it came into that low. That low is respecting price. Yeah, that low is respecting price at the moment, which was that 75 level. That 75. What do you know? Yo, if you're inside the inner circle, make sure you hop on, because this is going to be a high-value session, okay? High-value session loading. Or if you can't hop on, make sure you at least watch the recording, because it's going to be a good session of information. If you're not in the inner circle, make sure you join, because you're missing out on high-value talks, all right? I'm out. I'll see you guys next stream. Peace, 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 peace. We'll be live tomorrow. Tomorrow, same time, all right?